welcome everyone. I'd like to just sort of start by saying I am State Treasurer Colleen Davis, and as your State Treasurer, one of my top priorities is promoting financial wellness for the people of Delaware, especially for our state's hardworking government employees and folks that are working for nonprofits and that sort of help to support our communities and the work that we do. Student loan debt can be absolutely a huge burden, and it's a significant impediment to some of the financial wellness opportunities that we'd like to see folks growing in. All of you know that. I'm not telling you anything new. For many of you, student loan payments take a big bite of your paycheck, make it harder for you to pay a mortgage, keep up with bills, and even put food on the table. Fortunately, the federal government provides an opportunity to government and nonprofit employees to get out from underneath of that burden. In 2007, Congress created the Public Service Loan Forgiveness Program, or what we're calling the PSLF, which forgives federal student loans after you make payments for 10 years while employed in public service. The idea is simple. Many highly educated Americans want to go into public service to serve their communities in a variety of different ways. But for so many of us with high student loan debt, it can be very difficult to pay that off without working in the private sector. That's where the PSLF comes in, and it's what it's really truly meant to allow folks to serve their communities in government or nonprofit organizations while paying off their student debt. But until recently, the PSLF has failed truly to live up to its promise. There have been a lot of challenges and multiple reasons for that. But first, although the program has existed for 15 years, many public servants are completely unaware of the program and as a result have never applied or taken advantage of it. Secondly, more importantly, the program's rules and regulations have not been very clear or clearly communicated to borrowers. And as a result, many borrowers worked in public service for 10 years, applied for the loan forgiveness, and then got rejected because they hadn't followed the rules exactly stipulated and didn't convert their loans into direct loans or hadn't enrolled in the repayment plan properly, or didn't make those payments at the right time and failed to comply with other rules or regulations. But because of this, it was reported in 2019 that 99% of borrowers who had applied for the PSLF were rejected. And I've heard those types of stories over and over again. Many of those folks, even though they had worked in public service for 10 years, were told that they had to start over again from zero. So clearly the PSLF was not doing what it was intended to do. Fortunately, however, for many government and nonprofit employees in this situation, there is hope. And that's why we're here today. In October, the Federal Department of Education announced that for a limited time, it would offer the PSLF waiver. That means that some borrowers are now able to correct that student loan history, get credit for all of their years of service and payment, and potentially get loan forgiveness faster or even immediately. I will say and sort of stress this repeatedly that this fix is temporary. And again, I repeat, it is temporary. The waiver expires at the end of October of this year. So if you are eligible for this loan forgiveness, you can't necessarily sort of sit back and wait for it to be given to you. Many of you, if you are eligible, will need to take some necessary steps to get it and to get credit. And you'll need to get that done right away before the deadline, or else it may be too late. So please listen closely and find out whether you're eligible, what you need to do. Whether you've been working in public service for 1 year or for 20 years, definitely listen closely. Our presenter, student loan expert Heather Jarvis, may be able to help you get closer to loan forgiveness. I'm truly grateful for her time and for her ability to kind of come in and give us the step-by-step. I wish you all the best as you work to get a better handle on your student loan debt. And I hope that this is a step to a healthier financial future for all of you. For now, I will turn it back over to our moderator, Matt Rosen.
Let me introduce Heather. She's an attorney and a nationally recognized expert in student loan law. She's provided award-winning loan education and consultation for universities, associations, and professional advisors. She's sought after for sophisticated knowledge and accessible teaching style. Widely recognized as an expert source of information, she's advised congressional committee members and administrative officials on issues affecting student loan borrowers since 2005. Heather serves as executive director of the nonprofit Fosterus. She also recently served as an advisor to the U.S. Department of Education's Negotiated Rulemaking Committee. Negotiated Rulemaking Committee on Affordability and Student Aid, and she graduated cum laude from Duke University School of Law. Yeah, let me introduce our speaker for today, Heather Jarvis.
Thank you so much, Matt. I appreciate it. And thank you, Treasurer Davis, for having me. I am delighted to speak to public service workers in the state of Delaware today. So let's get started. There's lots to talk about. And we have a plan for today that is as follows. I want to give you kind of an overview of the whole universe of student debt relief programs, because there are many different parts that go hand in hand. We won't be able to cover absolutely everything that we would want to talk about in one session, but we will be focusing on public service loan forgiveness, as the treasurer said. So that we're all on the same page, we'll get a little bit of common vocabulary by talking about which kinds of loans are which, because that matters quite a lot to what our opportunities are for forgiveness. And we'll be focusing on this limited waiver opportunity to make sure that you know how to figure out whether or not you need to consolidate any of your student loans into the direct loan program. The other step that some of us will need to take, and that I want to make you aware of, is whether it's important to certify your employment using the Public Service Loan Forgiveness Help Tool that's available at the studentaid.gov website. And let me just mention, we prepared a packet of materials for you today that include links to the resources that I will mention. So everything I talk about today and refer you to is documented in that packet of information so that you can later refer to it and get to these websites. I will give you a little preview of what might be coming down the pike. I was just, even as we were getting our tech launched this morning, checking to make sure that President Biden hadn't forgiven some student loan debt this morning or extended the payment suspension, because things are moving rather quickly. And I do also want to mention that although we'll have time for a few questions today, we have a dedicated session for questions and answers coming up next Friday, and we'll be able to reach more of your specific questions then. So federal student loans are super flexible. They have all kinds of different repayment options we can choose from, and loan forgiveness provisions that can be super helpful for some student loan borrowers. There are also opportunities to defer or forbear payments, meaning temporarily pause our obligations to make payments. And there are even discharge provisions that are associated with federal student loans, things that protect us in the event of disaster, such as a disability or death of student loan borrower. Private student loans, on the other hand, are somewhat less flexible, so we will not speak of those quite as much today, since there isn't as much to say. But student debt relief comes in a lot of different forms. Many of you will be enrolled or are enrolled in income-driven repayment plans for your federal student loans. And those repayment plans, they all have different acronyms, things like PAYE or IBR, but they're all plans that establish your monthly payment according to how much you earn. And those programs have their own cancellation provisions associated just with the repayment plan that are not tied to our particular employment. So income-driven repayment has loan cancellation associated with it after 20 or 25 years, depending on the plan that you choose and the sort of loans that you have. And I will mention that in typical times, the forgiveness that someone could earn long-term based on their payment in an income-driven plan would typically be taxable as income to that student loan borrower. Now, right now, because of some of the COVID-19 legislation, student loan forgiveness, including the income-driven forgiveness, is not taxable as income, but that provision is set to expire at the end of 2025 in terms of the exemption from taxation of the income-driven forgiveness. It may be further extended by Congress, but it is scheduled to expire. So there's a chance that there could be a tax bill associated with that kind of forgiveness. Not the case with public service loan forgiveness, which is our focus today. Public service loan forgiveness is and has been non-taxable in any event. And so that isn't expected to sunset like the other tax relief provision I just mentioned. There are also all kinds of independent loan repayment assistance programs. These are operated sometimes by universities like our alma maters. I benefited from the one that Duke had available for public interest attorneys before the existence of public service loan forgiveness. There are those such programs sometimes operated by employers or state-based programs. Then there's something called Perkins loan cancellation. I won't spend a lot of time on it today because Perkins loans are less typical for us to have borrowed. And to the extent that you may have a Perkins loan, as I have had, those loans tend to be smaller amounts than we get through other federal student loan programs. But please be advised that if you have Perkins loans, and I'll be showing you how to determine if you do, those loans are eligible for cancellation under certain circumstances, particularly for teachers. Although there are a few other forgiveness provisions for Perkins loans, such as for military service members. One of the materials we prepared for you has detailed information on Perkins loan cancellation. So I encourage you to put a pin in that and get some more info on Perkins loans. And I'll refer to them a couple of more times today. There are also student debt relief programs that are specific to certain kinds of professions, such as teachers. There is a program called Teacher Loan Forgiveness. Some of you may be familiar with that program already. Again, we've shared materials in the packet with you about that. And teacher loan forgiveness is specifically for folks who are working in low-income schools. And so the requirements are really rather specific, and it's important for you to take a look at the fine print there and the materials that we provided for you. Also about teacher loan forgiveness is one of the few programs that explicitly states that you're not permitted to get credit for your time as a teacher towards both teacher loan forgiveness and public service loan forgiveness. But interestingly, that prohibition on the so-called double counting of service is also one of the things that is waived under this limited opportunity that we are talking about and that the treasurer introduced. So other profession-specific programs include things like the National Health Service Corps. There are many such programs for people in health care occupations. There are also things we call statutory discharge provisions. These are legislative discharge provisions for student loans, and they tend to apply again during times of disaster, disability, death, but also in cases where there are problems with schools who have, for example, defrauded borrowers. So there are many different sorts of programs, and it can be rather confusing the way that they do and do not dovetail with one another. These things were not established with any kind of elegant master plan in which they would all work, together. So to the extent that you find the overlap confusing, that makes perfect sense, and you're not alone in that. So this has got to be my favorite visual aid of all time. As soon as I saw this, I was like, I have got to get the permission to use this cartoon, because unfortunately, as the treasurer said, the real weakness to some of these programs has been that they are excessively complicated in their requirements. And those complicated requirements have not been well communicated to us as student loan borrowers. In fact, just this week, the Consumer Financial Protection Bureau, a federal agency, reached settlement with one of the student loan servicing companies regarding the misinformation that this company was giving borrowers about public service loan forgiveness in particular. So the program has been very frustrating to people, and it can be difficult as a borrower to navigate these things by yourself. So we've got a couple of polls today so that we can interact some, and so that I can have a better sense of who is with me today. And Matt, if you would please launch our first poll. I want to encourage you to think about your a timeline of borrowing. So some of the actions that will be helpful for you as a borrower will relate to when you borrowed your first student loans. The longer ago that you borrowed, the more complicated your circumstances are. And so it is smart to situate your thinking in time.
Let me just interject real quick. If you're on mobile, you might get a prompt, and you just need to click yes to participate in this poll. So now you should see it opening. Oh, and I will start the poll, and there you go.
Great. So let us know if you're comfortable sharing when you borrowed your first student loan. I'll tell you, I got my first student loan in 1988 when I was majoring in performing arts at the College of Santa Fe. And I borrowed all the way up through my graduation from Duke Law School. I myself borrowed $125,000. And Matt's pointing out the poll answers are anonymous, so you don't have to worry that we are capturing this information. Matt, you let me know when I should proceed.
Oh, well, I'll give people a few more seconds to answer. We still got some more people clicking. So get your answers in. All right, I'm about to stop it. So if you want to answer, do it now. Boom. All right. Now the results should pop up. Can you see them? Oh, I think maybe everyone can see them except you, Heather.
Okay.
Sorry. So I'll read the results to you. Less than 5 years ago, only 7.6% were less than 5 years ago. More than 5 but less than 10, about 25%. More than 10 but less than 20, 43.8%. And more than 20 years ago, about 24%.
Interesting. So,
Yeah.
and I think that's just about perfect, I would say, because that, to me, that indicates that this is the right audience for this information. So you are folks who have had student loans for a while, many of you, and so this is exactly the information that you need. So let's proceed with it. It's important to know which student loan servicing company you've been assigned to. Don't be surprised if your loans are transferred more than once. You've probably seen that already. There are some large servicing companies that are leaving the loan servicing business right around now and this coming year. So it is vital that you keep your contact information up to date both with the company that services your loans, and that's going to be something like FedLoan, Navient, Great Lakes, Nelnet. All those folks are hired by the federal government to service the loans. Keep your contact information up to date with the servicing company, and also at studentaid.gov. Log in using your federal student aid username and password and update your contact information in the profile that you have there. If you're not entirely sure exactly what kind of loans you have or what your interest rates are or what your disbursement dates were, because I'll be referring to things like that, get a clear inventory of your student loans by visiting the studentaid.gov website. I refer to this website a lot, and this is the official United States Department of Education site. It has a lot of very helpful and useful information, including a database of our federal student loans. And so many of the things that we will be going through today will be accessible at that site. But it doesn't have our private student loans listed since it's just a federal database. For those, really the best way to get a grip on it is to pull a copy of your credit report, which is available to you for free at annualcreditreport.com. It's smart to take a look at that periodically just to make sure there's nothing you don't expect. And also, if you compare the student loans on your credit report to the student loans on your federal record, whatever's on the credit report that's not in the federal database is your private student loans. And the last thing I'll really say about private student loans is that they are more like other kinds of consumer debt than they are like federal student loans. They're more like credit cards or personal loans in that they don't have the same flexibilities that we have with federal loans. And so what I encourage you to do is read the promissory note, which is just a couple pages of fine print. If you don't have it, you can request it from the lender. And the things that would be smart to find out are whether you have a variable interest rate on any private student loans. Variable interest rates are rates that change over time, and so those can be expected to start going up and have just started going up and may well continue to do so. So check to see if there's any cap on how high that rate can go. And then ascertain whether you have a cosigner. Most folks do for private loans, and some of the loans have cosigner release provisions that are not automatic, but that are excellent to apply for if you meet the requirements to have the cosigner released. And that helps to protect you, the borrower, and the cosigner. Having a cosigner on a loan only protects the bank. It doesn't protect you, and in fact, it can sometimes be part of some sort of hair default triggers that correspond with private student loans, such as, for example, the bankruptcy filing or even the death of a cosigner can cause a private student loan to enter default in some cases, according to the contract. So prioritize repayment of those with the understanding that they are not eligible for public service loan forgiveness. And so prioritize your repayment of those in various ways and possibly seek to refinance them. But allow me to caution you about refinancing any of your federal student loans into a private loan of some sort. It can be smart for some borrowers, but it's also can be risky, and it does involve giving up the unique federal protections that we are discussing today. So let me introduce public service loan forgiveness and the rules that are encoded in the statutory law of the United States. That, as the treasurer introduced, these are the very restrictive rules that have been in place for the program since its inception, and they are under review currently by the Department of Education in order to publish some revised regulations that will control this program going forward. But right now, we're in this interim period where the limited waiver has application to relax some of these more restrictive requirements. But these are the requirements that have so far been applied to many of our student loans. We had to make 120 payments to earn public service loan forgiveness, but not just any payments. They had to be payments that were driven by income when we were enrolled in one of these income-driven plans. It's a little more complicated than that, but that's sufficient for our conversation today. And the payments had to be exactly the amount due, not a dollar short. They could not be late or especially early. And the payments had to be of the full amount due. Those payments, while enrolled in this repayment plan, also had to be payments made on one particular kind of federal student loan called a federal direct loan. Now, federal direct loans have been the only federal student loans that have been issued since the summer of 2010. So if you are someone who didn't borrow any money until after the summer of 2010, your circumstances are a little bit simpler than for those of us who borrowed before the summer of 2010. So federal direct loans have been the only loans issued since that summer, but if you borrowed earlier than that, there's a likelihood that you may have some other kinds of federal loans. And we'll look at that here in some detail in just a moment. But borrowers were expected to make the right kind of payments on the right kind of loans while they were working in the right kind of job, a public service job, which is always going to be full-time and paid for either a government employer, and that's state, local, federal, tribal government, the agencies, the entities of government, and also work in nonprofit settings that are structured as 501c3 organizations, plus a few other additional nonprofits that were quite narrowly defined. Now, the work requirement is not waived, so we must still document that we have worked full-time for pay for a qualifying public service employer, government or nonprofit employer. And these payments that folks were to be making had to be made 120 times over at least 120 months. Those payments did not have to be consecutive, however, so it could take longer than 10 years to make 120 qualifying payments. If, for example, you move in and out of public service employment, which is perfectly fine and does not prevent you from progressing towards forgiveness. But there is no partial forgiveness. There is no, make 60 payments and get 50% forgiven. It was, make 120 payments over 10 years and jump through all these hoops at the same time, and then get cancellation of the entire remaining balance of the student loans. One of the many things that's been difficult for us as borrowers has been not only accomplishing all these steps, but proving it to the satisfaction of the loan servicers and the Department of Education. The paperwork and documentation requirements have been confusing and changing at various points during the process, but the most difficult thing has been the narrow focus on the counting of individual monthly payments. And so borrowers like you may have seen little gaps where each year you would file paperwork to recertify income, for example, for the income-driven plan, and that would cause the loan servicer to put your loan into a forbearance for a month while they processed the paperwork, and then sometimes not count a payment you made during that month, for example. So it was this focus on the individual payments that has made it so narrow for folks. And that's why the limited waiver has made things much more straightforward, in that it is now the case that the Department of Education is reviewing the accounts of student loan borrowers who have indicated their interest in public service loan forgiveness by filing certification of their public service employment. And they are reviewing our loan records in order to find the overlap between months in which we were working in public service and months in which our loans were in a repayment status, as we say. So if your loans were in a repayment status, that means that they were not in default. And default means that you have failed to make payments on federal loans over a period of 10 months, 270 days. Or so loans in a repayment status are not in default, and they are not in deferment, which is the status a loan is in when we're in school typically, and during certain other periods upon request of the borrower, or forbearance. And a forbearance is another way of postponing payments. And so to the extent that as you were working, you may have requested and received a period of forbearance, they're usually issued in 3 month, 6 month, or 1 year renewable increments. Periods of forbearance will not count towards the 120 months to achieve forgiveness. But other than default, deferment, and forbearance, if your loans were in a repayment status, so if you were enrolled in any repayment plan and you were making payments of any amount under those plans, whether they were late or partial payments or whatever, those months will now be counted towards the 120 required to earn the forgiveness. And it doesn't matter what loan program you were in. By loan program, I mean the federal government has had a lot of different federal loan programs. It's been direct loans since the summer of 2010, but before that, there was something called FEL, or FELP, stands for Federal Family Education Loans, and many of us have those loans. There are also those Perkins loans that I referred to earlier. That's a campus-based federal student loan, also not a direct loan, so not typically eligible under the usual rules of public service loan forgiveness. The employment requirement, as I said, not waived, but we as borrowers have to take specific actions if you've got those older student loans, as many of you do, or if you have not yet certified all your employment. And I will mention, I do see it coming through on the chat, and I also will mention now that the COVID payment suspension that has been in effect since March of 2020 is a very special and different kind of forbearance. It is its own unique circumstance. And the COVID-19 payment suspension is going to count in its entirety towards the 120 months required for public service loan forgiveness if you establish the employment requirement. So if you document your public service employment during the pandemic, you can be credited for all the months of the payment suspension, whether or not you made payments. And if you did make payments during the suspension when you were not required to, you may request a refund of those payments, and you may receive a refund of those payments and still have those months count towards the 120 months. So again, lots of loans that were previously not eligible, that you may have been told were not eligible, are now and temporarily eligible for public service loan forgiveness under the limited waiver. Matt, should we take a few questions before I continue?
Yes, absolutely. I'd be happy to feed you a few questions. Let me just address a few things some people have asked if they'll get the handout. And let me I made a little link for that handout that you were talking about, so I can put that in the chat to everyone. I just put a link in the chat. That should work. Actually, I didn't try the link, but it should work. And that should get you that handout. I should also say this meeting is being recorded, and we will send out the recording. And what else? And if anyone's having technical problems, you can also try the live stream. I emailed that link to everybody. So yes, some questions. Okay, I'll give you some softballs first. What if it's not consecutive, the experience? What if you work a few years here, then you have some time off and you work a few years somewhere else?
That's no problem. You don't have to be in the same position. You can have gaps between the qualifying payments, and it can take longer than 120 months to get to the 120 qualifying months, and that's no problem.
Awesome. And I've gotten a few questions about what happens about sort of taking out loans and then going back, working in public service, but then going back to school and taking out more loans.
Oh, yeah, that's a good question. That certainly comes up. So let's say you borrow some loans, you go into public service, you have some credit for months in public service in which you're making payments on the loans that you have. Then you go back, say, for an additional credential, you return into a graduate program, for example. You may borrow some new loans for the graduate program, and those loans would not have any credit towards forgiveness on them because you wouldn't have made any payments on them. They didn't exist while you were previously working in public service. Then you graduate from your graduate program and you start making payment on those loans. You could have two different sort of paths to forgiveness because forgiveness is on a loan by loan basis. So it isn't that if I do a whole 10 years of public service, I get all my loans forgiven. It's that if I make payments on a loan for 120 months, I get that loan forgiven. And so you could have two different timelines going.
Yeah, let me also ask you. Yes, a lot of people are asking about Parent Plus loans. Can you talk about, whether they qualify for public service loan forgiveness and whether they qualify for the public service loan forgiveness waiver, and all that?
Yes, so great question. I'm glad that you raised it, and this is a perfect time for talking about Parent Plus loans. So Parent Plus loans are a kind of federal student loan, and they are eligible for public service loan forgiveness, but it is trickier to actually get the forgiveness for plus loans for a couple of reasons that I will explain. And also, the Department of Education has not included Parent Plus loans in the limited waiver. So they are not waiving the rigorous requirements for Parent Plus loans. Parent Plus loans are those that we borrow on behalf of our dependent undergraduate children. And sometimes we can borrow a lot from those programs because at the undergraduate level, a student may only borrow a very limited and rather low amount of money from the federal government. And so if the student's borrowing is not sufficient, families will have to look either to private student loans or to Parent Plus loans, which are federal loans. So the parent borrower may earn forgiveness of the Parent Plus loans based on his or her public service, not the public service of the student on whose behalf the loans were borrowed. But Parent Plus loans, before being consolidated, are not eligible for any of the income-driven repayment options, which makes it essentially impossible to progress towards forgiveness on those loans. So what a parent borrower must do before being able to progress towards the 120 is get a consolidation loan that repays the Parent Plus loans. And even then, that consolidation loan is not eligible for every income-driven plan, and it's not eligible for the best of the income-driven plans or the cheapest. It is only eligible for the income contingent repayment plan, ICR, and ICR is fine, but it is not the cheapest of the income-driven plans. It tends to establish payments at about 20% of income, which is significantly higher than some of the other plans. So Parent Plus loans eligible for public service loan forgiveness based on the public service of the parent, but can only be enrolled in income contingent repayment and only then after consolidation. So if it works for you, Matt, I'm going to forge forward with some more information here. So other examples of federal student loans include subsidized and unsubsidized loans. The subsidy just refers to whether the borrower is responsible for the interest that accrues while they are in school. And Perkins loans, as I mentioned, are special. Perkins loans are also eligible for public service loan forgiveness, but only after being consolidated into a direct loan, because they are not direct loans unless they are consolidated. I want to show you how to find out exactly what kind of loans you have so that you can determine what steps to take. This is my loan account. If you visit the studentaid.gov website and log in, you see a dashboard. You need to click to view the details of your loans, and then you'll see another place where it says view breakdown. You want to see the view breakdown of your student loans. And then you'll get a whole list of all your loans. You have to drill down once again into view loan details. And when you do that, finally, you will see your loan type. And my loan type is one of those FEL or FELP, Federal Family Education Loan Program consolidation loans. So in order to get any credit for working in public service while I've had this loan, I need to reconsolidate it into the direct program. And I'll show you how that works. The direct consolidation loan application is also at the federal student aid website, that's studentaid.gov. It's under Manage Loans, Apply for Consolidation. And loan consolidation is necessary if you want to have payments on those older federal loans and unusual federal loan types to be counted towards forgiveness under the limited waiver. I went back somehow. So if you're wondering how many payments you may have and how many payments you may be credited for, you can determine that by documenting your public service using something that is now called the PSLF form. It's just one form, but it does a lot of things, so it can be somewhat confusing. If you have not already filed these forms and shown the servicer all the public service work you've done since October 1st, 2007, then you need to do that also by October 31st. So limited time period. And you do want to keep an eye on your loan servicing company, because it is true that payments have been undercounted in the past. And so these are the rules that we are explaining today, but it behooves us as borrowers to look after our accounts and to ensure that we are being treated fairly and that these rules are being applied as they should be. And if they're not, there are steps we can take in order to do that. So one place you can check to see how many payments you've already been credited for is, again, at studentaid.gov. There's a little section of that loan type screen that says PSLF cumulative matched months. And those are the months that they have already established that you made payments that counted towards forgiveness. This is what the form looks like that you will be filing, but I want to encourage you to populate the form at the studentaid.gov website, because they have a tool called the PSLF Help Tool, which takes you through a process where you can actually add your employer from an existing database of employers that have already been vetted by the Department of Education as qualifying. And the way to do it is to input the employer identification number, the federal EIN. And you find that on your W-2 form there in box B. It's not the same as the state ID number that's also part of the W-2. So make sure you look for the EIN in box B. That's the federal employer identification number. And when you put in that number to this help tool, it brings up a list of employers that you can add, and then you circumvent the approval process for that employer because it will have already been done. It's not actually an electronic application. It is a, sorry, there's a little noise where I am. I apologize. It's an electronic process, but then you have to print the form to sign it and to have it signed by your employer before it is submitted. And they are only accepting what they're calling wet signatures, which is a new term to me. But what that means is not a digital signature that captures it when you type and turns it into font. So it can be like a picture of a hand-drawn signature or an actual hand-drawn signature or scanned photo, but it cannot be a typed out signature or one of those digital certificate-based signatures. And I will pause here in just a moment for the final questions and wrap up from the treasurer's office. But I do want to say, as of right now, and I checked right before we came on today, there has not been a further announcement about whether payments will in fact resume as they are presently scheduled to do on May 1st. My best guess is that it is likely to be extended, the payment suspension, but we have not seen an announcement about that yet. There are lots of competing considerations, and so we expect to hear something. We need to hear something soon because it is April 1st today as we're recording this. So the only things I can really say in terms of preparing for repayment is do keep your contact info up to date. Check out something called the Loan Simulator at studentaid.gov if you want to experiment with some of the different repayment plans. And if you're concerned about your payment amounts, consider applying for an income-driven plan or investigating and learning more about an income-driven plan. I do have a few slides to show you about the repayment options. You don't really want to focus on the graduated and extended plans typically. Those are usually less useful for today's borrowers. They're a little bit outdated, and the income-driven plans have a number of unique advantages over those plans. But the income-driven plans are based on your something called discretionary income. That's a factor of your adjusted gross income from your federal tax returns. So it's based on the federal poverty rate that corresponds with your family size. And so they look at these poverty guidelines and take 150% of the poverty guideline that corresponds with your family size. And that amount of money you get to keep, with none of it being required to be sent to your student loan payments. But the amount you make over and above that is what is considered so-called discretionary. Whoops. So these are what payment amounts look like at different adjusted gross incomes for a single person. So let's say if you were earning $50,000 a year and you were a single person, your student loan payments would be just under $250 a month. And then finally, the last thing I want to mention is this negotiated rulemaking process is underway. There will be some new rules regarding public service loan forgiveness, as well as the income-driven repayment options. And so pay attention for updates. We expect to see these new rules taking effect in the summer of 2023, unless they are fast-tracked, which is also a possibility. But right now is the time to act on the limited waiver, determine whether you need to consolidate or not, and then determine if you have already documented all of your public service employment or not. and take those actions so that you can benefit. I will tell you that my guess as to across the board loan forgiveness for everyone is that it is relatively unlikely to occur in any large amount. Advocates are hopeful and are calling on the administration to cancel student loan debt. There may be, the president has expressed some willingness to consider a $10,000 of student loan forgiveness. And I think that it is possible that something like that may occur. But public service loan forgiveness and limited waiver is on right now. So that concludes my remarks. And I'd love to hear your wrap up, Matt, and Treasurer Davis.
Sure. Now I just would, if I just can slip in a couple questions that were being asked real quick.
Yeah.
So I know we don't have much time, and I just want to say we've had a ton of questions come in. I'm sorry we don't have time for them today, but all these questions that you're asking now, I will take them and bring them up at the Q&A session next week, or as many as I can. But let me ask right now. So you have the deadline for October 31st. So some people don't need to do anything and they'll get loan forgiveness at this point, but some people may need to consolidate their loans, get on the right repayment plan, certify their previous employment. Of those three things, I think I'm counting it right, three things. How many need to be done by October this year? You know, how many of those things?
So it is in order to get credit for payments that you may have previously not been able to get credit for, you need to file a consolidation application if that's necessary for you, if you have older student loans. If your loans are already direct loans, you don't need to consolidate at all. But if you do need to consolidate because you have some loans that are not already direct loans, that consolidation application has to be filed before October 31st. It doesn't actually have to be finished being processed by then. And similarly, you must file those PSLF forms that certify employment by October 31st for any periods that you wish for them to apply these more relaxed rules to. And then the department has indicated it may take them somewhat more time than the 31st to finish processing those things that we file by that deadline. But you don't have to have crossed the finish line for forgiveness by October 31st. You just have to either consolidate and certify your employment, or just certify your employment by October 31st, depending on your circumstances.
And these are other questions we've been getting from people. You know, if they're partway through the 10 years, can they still take advantage of the PSLF waiver? You did 6 years, 8 years, and so it sounds like the answer is yes. You should take advantage of the PSLF waiver to get credit for those past years, and then it'll get you. Then after a couple more years or a few more years, when you get to 10, you get forgiveness. Let me just toss two more questions to you. We've gotten some questions. Forgive me if you mentioned this, but people keep asking. During the payment pause during COVID, does that count for PSLF?
Yes, as long as you show the employment part. If you document that you are working full-time in a qualifying government or nonprofit job every month of the COVID-19 payment suspension, so every month since March of 2020 through now and through as long as this payment suspension is in place, can count towards the 120 months without any need for you to have made a payment.
And we've got a few people saying that they're having trouble getting employment certifications from their previous employers. What advice can you give them? First of all, in figuring out who they need to contact at the previous employer, and then trying to get the previous employer to sign it. What advice can you give them if they've worked somewhere before the state, another government or nonprofit, about getting that certification done?
Sure. So anyone who is authorized to sign on behalf of the organization and has access to employment records may sign that form. It doesn't have to be the executive director. It could, it could be, but it could be a human resources person. That would be fine as well. There is a box on that form, on the PSLF form, for a borrower to use if you cannot get certification from your employer. You can check the box and say, hey, I can't get them to sign this form, and then file it without them signing the form. Now that should be your last resort, because if you do that, then your application will take a lot longer to process, and you may eventually hear something back from a loan servicer or the Department of Education saying, okay, well, supply us with some more documentation. You can't go ahead and just submit additional documentation to begin with, but they may ask you for it. And that would be things like, they would want you to show that it was, a 501c3, for example, that was later dissolved, or, whatever the case may be. You may be able to self-certify by filing something like an affidavit, a form that you sign under oath in front of a notary, but it will depend on what documentation is requested. But do look at the form, because there is a place to sign for that issue.
Fantastic. So we are getting to the end of our time here. So let me just make a few announcements before we wrap up. First of all, thank you so much to Heather Jarvis. What an extremely informative presentation. Let's all give her a round of applause there for this excellent information. A reminder, our Q&A session is next week. So next Friday, same time, different link, same time though. So we'll go, we'll answer a lot of these questions there. Sorry, we couldn't get to more today. If you would like to submit a question for that, I created a URL, and I'll also send this in an email to everyone on Monday. But let me put this in the chat right now. I made another tiny URL here, tinyurl.com/student loan question. Okay, tinyurl.com/student loan question. And so if you submit your question there, we will get that anytime this week. What else do I have to say? Like I said before, this webinar is being recorded. I will try to send out the recording to everybody around Monday in case you want to go back and review or share it with other coworkers. And then again, I shared this earlier to download the handout. Again, I will email this to everyone. But it's tinyurl.com/student loan handout. That is where you can download Heather's handout with some of the information that we have today. And I think I'll just kick it over to Treasurer Davis to see if she has anything she wants to say to close out for today.
Yes, thank you so much. Matt, I've got to give you credit for pulling this together. What a success. And Heather, thank you so much. I mean, and also a big thank you to Dwayne. But, ultimately, my hope is we've helped people to get to a better financial wellness place. And we're talking about a few thousand people. So you've truly impacted lives, and thank you so much.